The Philippine economy has been experiencing consistent growth over the past few years, demonstrating resilience despite global economic uncertainties. In 2024, the country recorded a GDP growth rate of about 5.6%, and forecasts for 2025 from major financial institutions such as the World Bank and the International Monetary Fund indicate continued expansion between 5.3% and 5.5%. This performance places the Philippines among the faster-growing economies in Asia, reflecting its strong domestic demand and robust service sector. A key factor contributing to this stability is the gradual moderation of inflation, which has allowed policymakers greater flexibility to implement reforms and support economic activities. The government has focused on improving fiscal management, encouraging private investment, and advancing infrastructure development under various programs. These efforts have helped sustain business confidence and promote employment, especially in urban and service-based industries. However, the country's growth remains uneven. While the industrial and service sectors continue to thrive, agriculture lags behind due to recurring typhoons, floods, and other climate-related disruptions. This imbalance affects rural livelihoods and limits inclusive growth. The agricultural sector's vulnerability also highlights the need for stronger climate-resilient strategies and technological innovation in farming. Overall, the Philippine economy stands at a promising yet challenging stage. It has demonstrated strength in adapting to external pressures and maintaining steady growth, but sustained progress will depend on the government's ability to balance industrial advancement with agricultural development and ensure that growth benefits all sectors of society. The Philippines holds significant opportunities for continued economic improvement, supported by its strong demographic profile and ongoing policy reforms. One of its greatest strengths is its young and growing population, which provides a large, dynamic labor force and the potential for a long-term demographic dividend. This advantage positions the country as a key player in the Southeast Asian region, especially in industries that rely on skilled and affordable human capital such as information technology, manufacturing, and services. The government has also been proactive in implementing investment-friendly reforms. Tax restructuring programs and the simplification of business regulations have attracted both local and foreign investors. In addition, major infrastructure projects, such as new roads, airports, and digital networks, are improving connectivity and efficiency, which in turn support industrial expansion and job creation. These initiatives are part of the broader effort to modernize the economy and make it more competitive. The Philippines also has growing export potential, particularly in electronics, digital services, and outsourcing sectors. With global demand for IT-enabled services rising, the country's skilled English-speaking workforce remains one of its greatest assets. Recent legislation, like the Tatak Pinoy Act, aims to strengthen domestic industries by promoting innovation, local manufacturing, and sustainable growth. Overall, the Philippines is entering a phase of opportunity. If it continues to build on reforms, invest in infrastructure, and harness the potential of its youth, the country can achieve inclusive growth and gradually shift from a developing to a more advanced, resilient economy. Despite its promising growth, the Philippine economy faces several persistent challenges that could slow its momentum if not addressed carefully. One of the biggest risks comes from external factors such as global economic uncertainty, fluctuating oil prices, and trade tensions, which can affect exports and investment inflows. As an economy that depends heavily on overseas remittances and international trade, the Philippines remains vulnerable to shifts in global demand and financial markets. Climate change is another major concern. The country experiences frequent typhoons, floods, and droughts, which cause billions in damages every year and severely impact the agricultural sector. This constant exposure to natural disasters weakens food production, raises prices, and deepens rural poverty. The agricultural industry continues to struggle with low productivity, outdated farming practices, and limited government support, leaving many farmers unable to recover from recurring climate shocks. Additionally, public debt levels have increased due to pandemic-related spending and infrastructure investments. While borrowing has supported economic recovery, it has also placed pressure on fiscal stability, meaning that the government must balance development spending with debt management. Bureaucratic inefficiencies and policy delays further discourage some foreign investors, who often cite red tape and inconsistent regulations as barriers to doing business. Overall, the Philippines' main challenges lie in building resilience, reducing dependence on external conditions, strengthening agriculture, improving governance, and ensuring that growth is both inclusive and sustainable. Without addressing these weaknesses, long-term economic progress could face significant hurdles. Yes, the Philippine economy is gradually improving, showing clear signs of recovery and resilience after years of uncertainty. Economic growth remains steady, with projections from the World Bank, IMF, and Asian Development Bank all pointing to a growth rate of over 5% for 2025. This consistent performance demonstrates the country's ability to maintain momentum despite global challenges such as inflationary pressures, geopolitical tensions, and fluctuating trade conditions. One major positive sign is the steady decline in inflation, which has eased the burden on households and businesses. Lower inflation has also given the government and the Bangko Sentral ng Pilipinas, the central bank, more flexibility to support growth through sound monetary policies. Private consumption, which drives much of the country's GDP, continues to strengthen, supported by higher remittances from overseas Filipino workers and rising employment opportunities in services and manufacturing. Foreign investment is also picking up, thanks to improved investor confidence and reforms aimed at easing restrictions on foreign ownership and enhancing the business environment. Infrastructure development remains a priority, with the government continuing its Build Better More initiative to modernize transport, energy, and communication systems. However, while the direction is positive, progress is not without risks. Global economic instability, climate-related disasters, and internal governance issues still pose challenges. Yet, if reforms continue and fiscal discipline is maintained, the Philippines is on a solid path toward sustainable and inclusive economic improvement in the coming years. The overall picture of the Philippine economy reveals a story of steady progress, strong potential, and ongoing challenges that require careful management. Over the past few years, the country has shown consistent economic growth, positioning itself among the fastest-growing nations in Southeast Asia. This positive momentum is supported by a young, educated population, a rapidly developing services sector, and active government efforts to attract investment and expand infrastructure. The Philippines' demographic advantage remains one of its strongest assets. A growing workforce and rising consumer demand continue to fuel domestic spending and strengthen long-term growth prospects. Reforms in taxation, business regulation, and industrial policy are gradually improving investor confidence, while programs like the Tatak Pinoy Act and the Build Better More initiative aim to modernize the economy and enhance competitiveness. Yet, the journey toward sustained prosperity is not without obstacles. Climate vulnerability, a struggling agricultural sector, and high levels of public debt continue to threaten economic stability. Global market volatility and political uncertainties also create risks that could slow progress if not carefully managed. Ultimately, the Philippines stands at a crossroads. It has proven its ability to grow and adapt, but the next stage of development will depend on how effectively it balances modernization with inclusivity. Continued reforms, investment in education and technology, and stronger climate resilience will be key to transforming its steady growth into lasting, broad-based prosperity for all Filipinos.